Our decisions today can have a big effect on our future wealth and security. Here, we will briefly discuss two people's investment strategies and how they work for the future scenario. So we named the two individuals, Amit and Suresh, who have also chosen different strategies for their investments. Here, Amit is a conservative person with a desire for high returns with low risk from strategic investments. But Suresh focuses on long-term growth with a moderate risk-taking mentality. Both know that financial decisions shape the future. Let's journey together to discover different investment tactics used by Amit and Suresh on various levels and what we can take away from their experiences.
Amit's real estate investment perspective. I have invested heavily in the property sector. I bought a 3 BHK home in Bengaluru worth 70 lakhs INR. The initial down payment towards this investment was 15 lakh INR. I used EMI to pay the balance for the remaining amount. This plan has an interest rate of 9%. With this interest rate, I could be paying about 50,000 INR monthly as EMI for 20 years.
Real estate is indicated as a good investment, though there are attendant risks and problems. The real estate market may fluctuate, and the value of the investment may not continuously grow as anticipated. The demand may also be affected by other economic downturns and unforeseeable circumstances that may lead to a lack of income from the property. In addition, careful management is involved in the case of real estate investment. Property owners are responsible for repairs, renovations, and ensuring that the property is always presentable to possible tenants. Such extra expenses might take out some of the gains and require much of Amit's input. The purchase of a 70 lakh INR property in Bengaluru illustrates a high level of self-confidence. However, the payment for the property is made through the EMIs, and therefore Amit distributes the financial load over a long period. Based on these parameters, he would not be in a position to invest in mutual funds, FDs, or stocks, and come up with a very minimum amount of liquid money after 20 years. Why are Indian influencers misguiding Indians to not buy flats in metro cities?
Suresh's diverse investment portfolio perspective. I opt for living on rent and concentrating on creating varied investments. The investment scheme I want is a SIP of 15,000 INR per month with an increase of 10% for the subsequent 20 years. I also put some amount of money in digital gold as well as medium risk stocks, which will increase by 8 to 9% interest rate per year. Furthermore, I have also put aside 15 lakh INR into a fixed deposit, FD.
Several advantages exist for Suresh's investment strategy. He spreads out his investments into several asset classes in order to reduce the risk of losses due to one single asset. The liquidity is in the investment plan with fixed returns from the FDs, hedging against inflation with digital gold, and potentially higher returns from the stocks. Such diversification ensures that no possible loss is realized with an average 15% interest rate of approximately 40 lakh INR. This combination gives Suresh liquid assets that he can withdraw in any emergency financial need. Suresh's proposed investment scheme is comprehensive and includes diversification, liquidity, and even a chance of more profits. Although the market fluctuations are risky, there is active portfolio management that can reduce the risks and maximize investment returns.
Comparative analysis of real estate versus mutual funds. SIP. It becomes necessary to evaluate the financial position of persons in their late 20s or 30s and project the results upon retirement with reference to the short-term and long-term ramifications of both investment approaches. Real estate. Amit's long-term commitment is based on his perception of the maturing market condition and prospects of high returns in the real estate market. In this way, individuals can save money over time because real estate has always been growing. However, realtor investment may prove liquidity unstable because of market fluctuations of the investment's conversion to cash. Suresh's investment program is more sophisticated and involves diversification, liquidity, and higher gains. Investment in stocks and digital gold has higher liquidity and returns, which can reach a total maximum of around $40 million. Mutual fund SIPI. The right investment strategy depends on individual risk tolerance levels as well as financial goals. Amit may prefer a conservative approach to suit those who have a low risk tolerance and conservative mentality. Suresh's aggressive path may work for some who would rather take a risk. In the last instance, an investor has to consider a lot of issues, which include the building of wealth, liquidity, minimization of risks, and inflation hedging. By matching this with their risk tolerance and financial objectives, people have the opportunity to make sensible decisions that ensure an assured retirement. There are several factors involved in Amit's retirement scenarios, and the same applies to Suresh. This entails property reappraisal. However, if there is a long-term price escalation in the real estate market, investors will realize significant gains in their investments. Additionally, they may also experience a decline in the market that will be unfavorable to their retirement funds. Investment returns are also a point that must be considered. Amit's conservative approach may be more stable, but it may also mean lower returns than what Suresh may achieve with his aggressive strategy. Another challenge that could affect their financial stability in retirement is inflation. They need to make sure that their investments will not only have returns higher than the inflation rate, but also maintain these returns over the long run as the cost of living increases over time. Moreover, cases of ill health or change in economic conditions could also disrupt their retirement plans. Amit and Suresh should each have a contingency plan to deal with any unexpected obstacles and enable them to afford a comfortable retirement.
Comparing investment strategies is important, depending on one's situation, risk attitude, and ultimate aim of accumulating long-term wealth. Amit has faith in the prospective nature of the real estate market's development, which explains his attitude to long-term investments. For him, appreciating property values is very important. However, Suresh has a more aggressive approach, which produces greater returns but also comes with higher risk. Investors should also factor in inflation and health problems or economic upheaval like any other unforeseen event. Therefore, a contingency plan must be developed. If you want to tailor your investment approach to your unique needs and goals, seek professional financial advice.